In 2017, the entry of financial institutions into the crypto space was a major topic of discussion. Sure, Bitcoin is nearly 20,000 now, but just wait and see what happens in a few months when the big money comes in, people would say. Spoiler alert, it took longer than a few months. 3 years later, and institutions seem to be only just approaching crypto for the first time in a meaningful way. Meanwhile, over the last 3 years, companies and lawmakers alike have slowly chipped away at issues of infrastructure, regulation, viability, and more. Now, crypto is closer than ever to its institutional heyday. But what does the progress look like so far, and what still needs to be built? Recently, finance magnates spoke to Diogo, co-founder and president of Anchorage, about the kinds of infrastructural support that institutions need in order to enter into crypto, and how his company has been working to create it. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast. So first of all, Diogo, I want to thank you for coming on the show. It's such a pleasure to have you.
Thank you for having me.
Yeah, definitely. So I know who you are. Can you tell our listeners a little bit about who you are and the work that you do?
Yeah, my name is Diogo. I am the co-founder and president of Anchorage. Anchorage is the most advanced digital platform for institutions. We allow institutions access to the ability to do not only custody, but brokerage, extending credits, participate in assets, in governance, in DeFi, in staking, and all these other elements that are necessary for institutions to really come into crypto and participate actively. My background is interesting in the sense that Anchorage's story is also the story of myself and my co-founder, because 10 years ago, we joined a company called Square the same week. And so in a way, I can actually pin Anchorage's creation back to 10 years ago when I met Nathan. At the time, yeah, it's pretty interesting, because if you look at the genesis of Anchorage and the creation of Anchorage and the space that Anchorage plays, it really is the Venn diagram of our skill set. It is the thing that we've been working on our careers for the past 15 years, and the universe just handed us in a silver platter the exact Venn diagram of our skill set.
That's great.
As an example,
it's from the universe.
Yeah, it is. It is. I think it's what they call, and I had heard of, perfect founder market fit, but it was really with Anchorage that I was able to see that be perfectly aligned.
Okay.
The quick story there is, before I joined Square and met Nathan, I was doing something that was not particularly useful at the time, which was a PhD in computer science, but working on distributed systems. So publishing academic papers in 2007, 2008 on Hashcash, which is the proof of work mechanism that Bitcoin uses on distributed randomness, which gets used by all of these new types of blockchains, on solving the Sybil attack, which is one of the major breakthroughs that Satoshi Nakamoto had with his paper on the creation of the blockchain and solving the Sybil attack in the decentralized fashion. So that was unique in the sense that it was an academic pursuit that 10 years later, or 15 years later, actually is very useful. And then ended up joining Square, meeting Nathan, worked with Nathan for 4 years. We led the security team there and built everything from the little credit card reader that I'm sure you've used at some point to start your credit card, to then going on to a company called Docker that is an infrastructure play, and we led the security team there, to then creating Anchorage just about 3 years ago, and coming on this amazing journey.
Yeah. So as you kind of touched on earlier, there's a lot of different things that Anchorage does. So can you break that down a little bit more specifically?
Absolutely. At a high level, Anchorage follows client demand. Clients ask for things and we deliver them. As a business model, is as simple as that.
Yeah.
Initially, when we started the company, there was a need in the market. In 2017, the status quo for institutional custody was cold storage. The best way that I have to describe cold storage to listeners is, imagine, pirate custody. Imagine pirates in the 1700s. They have gold coins. They put them in chests. They bury them in islands, and then they create a treasure map. That was the status quo in 2017, early 2017, for Bitcoin custody. People were plugging away or putting these USB keys or these ledger devices. They were putting them in safety deposit boxes. They were, putting them in some mountain of some bank, buried underground, essentially, and then they were creating checklists on how to access them again. So it was pirate custody, but the modern equivalent. So there was a clear need for a platform, a technological platform that provided clients a safer solution than cold storage, but without the human constraints, without the fact that there's human operations, and obviously the speed is limited by how fast a human can go to the bank. And for an institution to transact crypto, that should not be the case. It should move in minutes. It should not move in many hours or days. So that was the first problem that Anchorage started by solving. And then from that, again, as I mentioned, client demand. Now that we had a technical platform that had these safety guarantees, people wanted a regulated platform. And so we got a qualified custodian and we became regulated in the United States. And then after that, they decided they wanted to use the private keys, not just to sit on them as an investment long-term holding, but to actually participate actively in these governance protocols. For example, Anchorage is the world's largest custodian of Maker. Maker requires you to vote on governance decisions about DAI, the stable currency. So investors want to participate. So they wanted to use these keys for staking, for governance, for their actual original purpose. So that's why we created that ARM, staking services, governance services, active key use. And then after that, clients said, hey, this is great to be able to use crypto on the platform, but it would be fantastic if you could buy and sell it for me. And so that's why we added Anchorage trading, just all of a sudden now we can buy and sell for our clients. And, the next step was, hey, Anchorage, I have all of these crypto on Anchorage's platform. Can you not take that Bitcoin as collateral and offer me a US dollar loan? Can you not extend me credit? Because you already are the trusted party. You already have the safety of the mechanism. Can I not just get a loan from you or get a credit line from you? And so we delivered Anchorage financing, and that's one of the latest announcements that we've actually made. So it really comes out of client demand in one step after another, really on this path to building the majority of the services that in the traditional world we call prime brokerage.
Right. I mean, I love that. Like, it seems like the growth for this platform was so organic. A lot of the time, in cryptocurrency and also outside, like, people kind of start with a grand vision of, an ecosystem or a product that doesn't necessarily have users or even a use case.
Right.
But I really like to see that you took this kind of, from the ground up and just kind of gave things, as they were asked from you. Yeah. So I want to ask you, a little bit about this staking for institutional customers. I mean, obviously this is sort of a new thing. Yield farming, staking is like the new hot topic at the moment. So can you talk a little bit about what those services look like, on an institutional level?
Yeah, the concept really is you have different cryptocurrencies with different mechanisms of guaranteeing network security. Bitcoin, everyone knows that uses proof of work and uses miners, and hashing is the mechanism of security, which is somewhat equivalent to electricity use. And then other mechanisms are using either proof of authority or proof of stake. And then whenever you invest in a cryptocurrency that uses proof of stake, you are faced with the following situation. You have an inflationary currency. There is new assets being created to pay out the miners effectively, or the miners equivalent, which are the people that actually are doing staking. And if you are not staking, if you're not delegating, if you're not actually actively participating in the network security, you're actually being diluted. You're being inflated away, and your assets are being inflated away. If there's one thing that I know our clients don't like is being inflated, and the space has a lot of touchy feelings about inflation and inflationary assets. And so one thing that they did want is take advantage of the opportunities that these assets provide. And their assets, they have staking gains all the way to 20% on a yearly basis. Or if you turn it around, they have 20% inflation on a yearly basis. So your asset originally was worth $1 million, now it's worth 20% less. And so this is a necessity. And in a way, it stops being something that you can do to something that you must do. You must stake these assets, because otherwise there's a significant downside for you not to do so. And you mentioned yield farming. And now the yield farming is the concept of, hey, there might be an opportunity that actually generates more yield from the same set of assets, that it's not staking those assets. Or even better, what if I can stake those assets and be able to generate even more yield out of the assets that are staked? Can I create derivatives on top of it? Can I find a way to do it? And so yield farming is very exciting. And it is this concept of, where can I get the best yield for my assets? Where can I double up the investments? Where can I actually generate more yield? So you can be long the cryptocurrency, and you can also generate more yield on top of it.
Yeah. Okay. Great. Yeah. I mean, that's such an important point you made about this inflationary, deflationary thing when it comes to staking. I think that's something that's sort of left in the background, why is this so important? I also want to ask you a little bit about, are your clients primarily based in the United States?
We have clients internationally, but the majority of them are within the United States. Part of that is the place where we were created, the networks, the original networks, and also because it's the largest market. Over 50% of the market is in the United States.
Right. Okay. And Anchorage is incorporated in the United States also.
That's correct.
Okay.
And we have offices in New York. We have offices in South Dakota. We have offices in San Francisco, which is our primary HQ. And we also have an office, newly opened office in Portugal.
Okay. Oh, in Portugal, how exciting! Yeah, South Dakota. Wow. Yeah, you don't hear a lot of crypto news out of there, so that's exciting.
Yeah, South Dakota is actually a fantastic state for crypto companies. In fact, the custodian that has a trust company, South Dakota Trust Company, that has been doing crypto custody for longest, I believe for 8 years now, is out of South Dakota. It's actually a state where trust companies are very common and where the state law around trusts is very beneficial towards the clients. It's very clear who the assets ownership lie and how the resolution of issues is handled. And so it's a really, really friendly state towards business from trust companies, and now towards cryptocurrency. So we've been very happy. We have a South Dakota Trust Charter, and that's the entity out of which we can provide qualified custody to our clients.
Okay. That brings me to my next question, which is, I just wanted to ask you a little bit more about, sort of as you've developed this ecosystem through Anchorage, sort of piece by piece over the last couple of years, what has the process of dealing with regulators in the United States been like? This is something that's been talked about quite a lot, kind of less so lately as things kind of are becoming more clear over time. But I just wanted to ask you, are there any particular challenges, obstacles, successes? What has that journey been like?
I would say that, when I was at Square, we had to do a lot of MTLs because it was a payments company. And so we had already experience. We had also had to do SOX compliance. We had to do PCI DSS. We had to deal with lots of compliance issues and with a lot of regulatory involvement in things that were money moving. And so in that sense, it was not a surprise for us, the amount of work that took to actually get regulated entities and, get all of our T's crossed and our I's dotted. And what I would like to say is the fact that regulators don't all come in the same, they're not all the same. Different regulators have their own idiosyncrasies. That's right. And you have to deal with lots of regulators. There's not just one regulator. There's state regulators, there's federal regulators, there's, so many types of regulators that you actually have to integrate on a daily basis. I do think that it's the cost of doing business, and it's actually beneficial for the industry, because what I've seen is that the regulated entities, by and large, have been acting in a capacity that is fiduciary in the sense that, it's the best for their clients. There's scrutiny, there's insight. And crypto did suffer initially a few years ago from, this Wild Wild West mentality of everybody can do whatever they want. And I do think that that going down the path of regulation is very important for the maturity of the space. And so I think we've crossed, we're in a new chapter in that sense, in the sense that there is a lot of regulated entities right now. The interactions is what you'd expect. Sometimes slower than you want. There's more conservative views on the other side around the businesses that you're trying to push forward with. But in many cases, very collaborative. And in many cases, it's very surprising to understand the depth of knowledge that the regulators have actually acquired. And this feeling of the regulators don't actually understand, or this meme that actually sometimes is spread out. It's not true. It's not necessarily true. In fact, we now have, very complex, deep down, detailed conversations around staking. And, that's something that is complex, confusing, and varies from asset to asset. And so just the fact that we are engaging in conversations around staking with regulators really show the fact that they've already gone a long way in terms of understanding the space. And there's also a lot of excitement. There's a lot of, again, not all your mileage may vary, but not all the regulators act the same, but there's a lot of excitement around the space, and there's a lot of opportunity in the space. And you can see a steady stream of people working for regulators. They are now working in the private market in cryptocurrencies. You don't need to look very far to see that pattern, to see that trend. And that's exciting. They are the ones regulating it. They're being the ones in the front lines of the regulation, and then come to the private sector to help people navigate that.
That is really exciting. And I love that you said that there's sort of a new chapter in regulation in the United States forming now that there are so many regulated entities. So from your perspective, how has that sort of changed maybe the United States position as a global hub for cryptocurrencies? As more of the infrastructure gets built, how do you see the market changing in the United States?
Well, I guess the best example is the OCC news that came out a couple of weeks ago.
Mm-hmm.
And I think that's a very positive development.
Mm-hmm.
It effectively means that, any chartered bank in the United States now has green light to actually do custody of crypto assets. So it's a unique opportunity for players like Anchorage that provide a platform that enables those banks to come and play. And so in fact, for us, it's the most exciting news that can happen. You now have, 5,000 different entities in the United States that have green light to actually do this, and they don't have the technology. And we are the perfect platform for them to actually, take use of the technology and immediately start offering these services. And it comes at a time where, if you think about the way that the market stands, banks and other entities are looking for other opportunities outside of the traditional investments. They're looking for high yielding opportunities. They're looking for acquisition of the younger generation, the millennials that they've been losing. And what better way there is there to attract clients than add crypto to your offerings? It is just, we've seen it with Square Cash. We've seen it with a lot of different rumors around larger players also adding cryptocurrencies to their offering of their peer-to-peer money sending services. And so there's so much excitement, and part of it is because of the potential business opportunity. But I believe that more of it is to attract a new set of clients to their platforms, which they can do with crypto and they can do with very little else.
That is really exciting. Yeah. When you put it out that way. And I can't remember exactly who sent the tweet after the OCC news came out, but it was some industry advocate who said basically like, I can't wait for banks to start kissing my ass.
Not quite how I would have phrased it, but yes.
Yeah, exactly. But I think that's a great point, that after this news came out, that Anchorage is in a position to really take hold, potentially in some of the banks in the United States. So are you already making plans and are you chopping wood and carrying water already at this point, or are things?
Yeah, everything that we've done, if you look at the path, is to get platform and services ready to onboard other players. The way that I describe Anchorage is really an institutional platform for institutions to come into crypto. That means that it's really across all types of institutions. If you are a crypto fund and a hedge fund, which was the primary client of Anchorage 3 years ago, it's the perfect platform for you. It is regulated. You have the ability of doing audits on it. You can buy and sell. You can custody the long tail of assets, not just the Bitcoin or Ethereum. And you have a safe platform that is very usable and very secure for you to use on a daily basis. But if you're a corporate and you want to come into crypto, you have APIs to allow you to come into crypto in a regulated way, in a way that is trustworthy, in a way that takes advantage of the fact that Anchorage has an amazing track record in some of the largest clients in crypto. Really, if you think about the fact that Visa is both an investor and a client of Anchorage, that's very unique to have a company like that on the Rolodex supporting Anchorage and really supporting our initiatives. So that's one angle that I want to talk about, is the fact that we've already have the perfect example is actually Anchorage financing. Anchorage financing is a service that allows our clients to take out loans backed by Bitcoin as collateral. And that is done with capital providers. And the capital provider, in this case, that we've announced Anchorage financing with, is Silvergate. So there you have it. It is a bank that is already using Anchorage as the platform to not only do custody of the crypto assets, but also to have the risk management component, to have the ability of doing automatic execution or automatic liquidation of collateral, to actually manage all of the complexities around crypto and around the platform that are necessary for you to have a successful business. And so, we've already been working with banks, and now this is just, a clear green light for more banks to come in. So we're really excited about it.
That is very exciting. I have a feeling you might make a lot of money in the near future.
Our investors sure hope so.
Yeah, definitely. So I want to switch gears a little bit and go kind of talk a little bit about user demand once again, and you mentioned that this is sort of what's guided your development. So, of course, this year this has been a crazy year in markets in general. We had this Bitcoin cryptocurrency crash in March, followed by this long period of stagnancy, and now this altcoin DeFi season that's cropping up. So, I'm curious, sort of, what are your observations? What are the most important things that have happened in the market that this year, and also how is that influencing the things that Anchorage is working on at this moment?
Well, the momentum is very exciting. It's very clear, and it's known that the price action actually drives a lot of institutions into the fray. And this FOMO, fear of missing out, is definitely a huge catalyst of the space. And so in that sense, we're seeing more and more demands from large institutions in a way that we weren't really seeing 2 years ago. The last time that this happened. For Anchorage, it's more about the professionalization and the maturity of the players that are coming into the space. You have very large banks involved. You have assets like Libra and the Libra Association that have massive players like Facebook with billions of relationships with consumers that could actually turn this around in a moment if they actually come to this space in a meaningful manner, and Libra succeeds as we expect it to succeed. And there's more and more excitement. You already see the inflows into GBTC and other of those types of products increase in a very meaningful manner. And so it's fantastic to see that we've been preparing for this for the past 3 years. And 3 years ago, the feedback to crypto was there's no custody, there's no liquidity providers, there is no financial services and companies that are trustworthy and safe for me to actually come into this space. And Anchorage has solved that. And being here 3 years later with every single one of those questions answered, and of those things that were roadblocks solved, is just a fantastic place to be. So the excitement around crypto is not just the price action, but it's this time we actually are ready to make sure that the large institutions can play in a regulated space, in a space that has the types of services and the types of products that they're used to in the traditional world.
Okay. Yeah, absolutely. And this is kind of what people have been saying in the DeFi space also. Finally we're kind of at this place where the infrastructure is there. Now it's just sort of a question of getting the users, getting the institutions into the space in the way that people expected them to be 3 years ago when there was no infrastructure.
That's right. And DeFi is unique in the sense that, we've seen a lot of interest in DeFi from organizations, but it is also something, they're testing the waters. I haven't really seen institutions that are all in on taking, number one, smart contract risk, which there is smart contract risk, and there are some platforms and insurance trying to solve these problems, but it's still very new. So I'm seeing them, dip their toes in the water and test out these products and come into the space. But it's the prior investment in the crypto asset in the first place. It is the belief that these networks will have value. It is the belief that there will be product market fit, and that in a way, these building blocks, financial building blocks of DeFi, are actual product market fit for crypto. That is the precursor to all of that we're seeing. So I expect that until large institutions meaningfully come in a meaningful manner into DeFi, we need a precursor to that, which is they need to meaningfully come into the space, into the crypto asset class, create these relationships with organizations and platforms like Anchorage to do custody, to do staking, to do governance, for them to get used to internal processes, which are different for crypto, to get used to their compliance teams, get used to the space, and get this this myth around the space that we had like 5 years ago or 3 years ago around Bitcoin and equivalents that no longer exists right now. And so I think that's fading away very quickly, and it's pretty exciting. And then once that happens, platforms like Anchorage that allow access to DeFi are the perfect gateways to actually, make the meaningful contribution. Because if you already have your assets safely held with Anchorage and generating staking returns from Anchorage, then it's obvious that we will be allow you to provide access to whatever is the new asset or the new type of DeFi instrument that you want access to. And so it's pretty amazing to see the fact that, in a way, the fact that the custodians are helping or the platforms like Anchorage are helping the institutions coming to the space, then they make it available a lot faster, the next wave of crypto adoption, because we are the platform that provides, like we provide one type of service to staking, we can also provide another type of service. So it'll be a lot easier to go from 1 to N products than it is to go from 0 to 1.
Exactly. Yeah. So it's this kind of, I think this new term, I've just, it's probably not a new term, but new to me, virtuous cycle, like
Virtuous
something
cycle.
that kind of builds on itself.
That's right.
Yeah, definitely. So Diogo, I want to thank you so much for your time. It's been so delightful to speak to you. Before we go, do you have any specific announcements or can you share where our listeners can find more information about you guys?
Yeah, absolutely. If you're looking for me specifically, the best place is Twitter, Diogo Monica on Twitter. If you're looking for Anchorage and see the products that we offer, Anchorage.com is the best place. We're really excited for a couple of announcements that are coming on this topic of platforms, on this topic of DeFi. And so, stay tuned for news. And in the meantime, we offer today trading, credit through Anchorage financing. We do staking, we do governance, and we obviously do custody in a regulated manner. So if you're looking for any of these services, make sure to go to Anchorage.com.
Awesome. Thank you so much. Take care.